The quirky fact about our next presenter is that he loves to play board games. In fact, his wife recently banned him from buying any more because his collection is standing at more than 100. But he tells me that if you're spending time with your family this Christmas, there are 3 games that you need to buy. Ticket to Ride, Zoo Loretto, and Bang the Dice Game. So you heard it here first. So please welcome Blake Henricks from Firetrail.
Thanks, Louise. And that is true, guys. Ticket to Ride, Zularetto, and Bang the Dice Game. If you're sick of your kids getting on mobile phones and doing all that kind of stuff, it's an absolute special for Christmas. When you drill an oil well, the clock starts ticking. Now let me show you something. Imagine this is an oil and gas reservoir below the surface. If we go and drill a hole in that to extract oil, the clock starts ticking because oil is driven by pressure, and over time, as you let the oil out, the pressure goes away. What that means globally is that if you drill a well, production, if you do nothing to it, will decline at 5 to 7% per annum. The oil and gas industry needs to invest over time, and the biggest beneficiary of this is WorleyParsons, which is an Australian listed company. There are 3 reasons why I really like WorleyParsons. The first is for the position we are in the cycle. The second is for the self-help that's gone on over the last few years. And then finally, the valuation, which is just 12 times PE at the moment. The first reason to look at WorleyParsons is for where we are in the cycle. Now, if you remember, oil was over $110 in 2014. It fell all the way down to $28 in 2016. And imagine if you were running an oil and gas company at the time. The first thing you do is you cut your dividends, you fix your balance sheet, and you sure as hell do not invest another dollar until you get things going right again. The oil price has been recovering over time, and it has been noisy, and at the moment we're in a little bit of a down cycle, but it's gone from $28 to today around $60. Now, what's that meant for WorleyParsons? WorleyParsons is an engineering firm, so they rent out their engineers on a dollars per hour basis. They don't do these big fixed cost projects that are blowing up at the moment. It's a really simple business. Have a look at where WorleyParsons is in terms of revenue. Gee, this is a big chart, isn't it? You sort of need to step back for a moment. But basically, in the past few years, their revenues are down 50%. The oil and gas cycle is turning, and we know this because in the past 5 months, so the 5 months to today roughly, WorleyParsons have won more business than at any time since 2013. So the cycle is returning as the oil price is returning as well. And when you consider the average oil well declines at 5 to 7% per annum, we know the market needs to spend on production just to hold it flat, let alone grow it. The second reason for WorleyParsons is for self-help. Now, we love buying businesses that survive a crisis. Emphasis on survive, because you've got to get through it. But when you do, you typically come out with a business that is run much leaner. It's got great corporate memory and typically a really fixed balance sheet. And WorleyParsons ticked all those boxes. In 2015, they actually received a gift. And the gift was a CFO named Tom Honan. Now, Tom Honan was the CFO of Computershare and Transurban, very, very experienced operator. He came in and he cut costs. He got rid of bloated head office costs. He fixed the balance sheet by focusing on cost collection. Now, you wouldn't believe this, but engineers love solving big, complicated problems, but they don't really like getting into billing clients. And that's the part where the cash hits the balance sheet. And so he became very focused on the cash hitting the balance sheet and fixed it up. With all that cost out and the fixed balance sheet, we believe WorleyParsons is actually really well placed as this cycle improves to grow earnings much faster than their revenues. And then the third reason to buy it is because it is deeply undervalued at the moment. In fact, it's trading on 12 times FY19 price to earnings ratio. There's 2 reasons it's undervalued, because there's no stock that trades that cheaply without a rub. And here's the rub for you. I don't think it's a big deal. The first one is they've just acquired a large competitor called Jacobs Engineering, which is a chemicals business in the US. So it actually doubles the size of the business. But because the CFO has been so conservative, he decided to raise close to $3.5 billion of equity. What that's meant is that stock has hit the market in the past 2 months, and the stock price has fallen as a result. So we think that's more technical, and we actually think that transaction will be terrific for Worley shareholders if you've got longer than a 2-month horizon. The second reason why it's undervalued is because the oil price has fallen recently. Oil hit all the way up to $85 a month and a half ago, and it's fallen quite rapidly back to $60. WorleyParsons has followed that. Some of that's fair, but I think the main point here is that you need to invest in oil and gas over time. And so if there's delays, if there's things that happen, the market will be back, it's coming back, and this lower oil price is actually the buying opportunity for WorleyParsons, and that's why it's my best idea. Thank you.
You taking your balloon?
I don't have any WD-40, but I've got a free balloon.
Thank you.
Yeah.
Thanks very much, Blake. Fantastic.